What is up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. Just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, let's dive into it here with Bitcoin on the weekly time frame, folks. So we have a weekly candle that's going to close in roughly 3 days. And right now it's looking like our high is going to be set. Now, we don't know that for sure until the weekly candle closes, so we have to reserve our judgment. But one thing that we do know is that on most major exchanges, we've been seeing declining bull volume over the last 4 weeks. Now, on this exchange, we did have one small increase over the last 2 weeks, but pretty much all of the major exchanges that lead in volume, like Binance, Coinbase, have that declining bull volume all the way down. All the way up on this rise in price. And so if we're seeing that as the price is rising, what that's telling us is there's less buying pressure with each subsequent stab up each week. So it would not surprise me for us to see a candle like this close this week, and then next week see a candle that draws down to start to form our higher low that we will likely form above this previous low that we set on July 19th. So I'll be watching for this weekly candle close to see, to give us kind of a hint as to if our high is going to be set or if we're going to close up above the previous weekly open and see, not the previous weekly open, the previous weekly close, and see if we can continue a bit higher before forming that high. But we are going to have to form a high sometime soon, given that we've risen for the past 6 weeks in a row without coming down and forming a higher low. Eventually, you have to come down and do that. So it's just a matter of where that's going to be. So we'll keep an eye on this. And then once the price starts to draw down, that's obviously an opportunity for bulls to buy the dip and hopefully continue this rally up with a higher high thereafter. So it'll look something like this. Very simple. We'll come down to form our higher low, and then wherever we form that higher low, we'll be looking for a push up, and the closer that higher low is to the high that we're setting, the more likely it is that we'll make a higher high and push above the previous high. The lower we go when we draw down to form that higher low, if we draw all the way down to like here and then we bounce, now we're much further away from the high. So for us to form a higher high, we have to go up all the way, like 41%. So that's why you want to set that higher low closer to where the high is, so you can continue that trend, so you can confirm that bull trend very easily. So that's what I'll be looking for over the coming days and weeks. If we look at the 3-day time frame, we can see that what I talked about yesterday has come to fruition here with a candle close above the key high here on the 3-day time frame. So we have a clear bull trend here. So we have a low, high, higher low, and then higher high with 2 candle closes above this key high. Yesterday's 3-day candle closed above this high. Therefore, this last down candle from this drawdown right here is going to be the area for potential support. Now you can see that we've come into this zone already almost immediately after this candle closed. Very obvious bearish candle here with a spinning top candlestick. We see a drawdown immediately thereafter, and we come into this blue support zone. Now the question is, are we going to bounce off of this blue support zone, or are we going to push right through this and close below it? So that's going to be something I'm going to be keeping an eye on over the coming days. Right now, this candle closes in a day and 22 hours, so basically 2 days. And right now, the bulls have been defending this area. So you can see that the moment we wicked into this zone below the not yesterday's, but the previous 3-day candle's low, people have bought that dip pretty aggressively. And so that's good news for the bulls. And if this does end up bouncing, the minimum that it'll end up bouncing is to the previous 3-day high, which would be either here. Right now it would be here because we're in this candle, so it would be the previous 3-day high. Or once this candle closes, it'll be wherever this 3-day high is. So that'll be something to keep an eye on over the coming days. And that's kind of like an intra-week trade that has some potential. But you can also see that what I talked about with this gray resistance level has also come to fruition here as well, with a second rejection off of this level. So you can see that we had one rejection here, and we came into it again, and I said it's likely we'll have another rejection, and the reason is because this is a 3-day resistance level, and typically you need at least 2 or more tests before you break through it. You typically don't break through it on the first test, and then the second test is usually still pretty strong. So we saw another test here, but now if we come back into it again, we could see us push through this gray resistance zone. So that's something that I'll be keeping an eye on as well. If we go to the single day time frame, so on the single day time frame, something that I am now keeping an eye on is a potential for a bear trend to be formed here. So right now we have 3 components of it. So we have a high, low, lower high. So that's 3: high, low, the bottom of this white candle, lower high because this wick goes above this previous high, and now we're going down again. So now we need a lower low with 2 candle closes below the key low here, the white candle's low from August 25th. We got one today on today's daily candle close. So now this next daily candle close is crucial. We need to get a candle close below that low. If we're a bear, we want to get a candle close below that low, because then that'll turn this white candle into a resistance zone similar to this red resistance zone back here. So this is where we had our bear trend. So we had a high, low, lower high, lower low. Right here you can see we broke above the previous daily high. We set a high here, and then we came down. I've been talking about this being a support zone for price. Resistance zone for price. And you can see that we've already rejected off of it 3 times. So we came into it here once, come into it here 2 times, come into it here 3 times. So this red resistance level, like I said, was going to be very formidable, and it's held up that way so far. But every time that we come into it, it's getting weaker. So if we keep coming into it, we're going to end up breaking to the upside. And then once we close above this on the upside, we close 2 daily candles above it, then we're in good shape for a bounce off of that level for support. So that's something to keep in mind. The other thing in the single day time frame is the super guppy, which I've been talking about the area. This is the area that I'm looking to buy some Bitcoin if I am bullish. This is where I'm looking to scale in because we have not drawn into these EMAs just yet, and they are usually very good for a bounce on the first test. And you can see that based on, we'll just go back here a little bit. So you can see that once they expand here, they expand, these shorter EMAs go above the longer term EMAs. We get a test of what's called the investor EMAs, the green ones here. We get a bounce. Here's another opportunity for an addition to the position, and we get another bounce. And then we ride that trend all the way up. And then on the bear side, you can see once they expand here, here's the first test of them again. And here's a very significant drawdown thereafter. So, first test of these, in my opinion, will likely lead to a bounce as well. So it's just a matter of how far into these green investor EMAs are we going to go. So if we do end up going below the light blue support zone, I'll still expect a bounce off of these. And these will continue to move up. As you can see, they're just gradually moving up as the price moves up as well. So these will just continue to move up, very similar to how they just continued to move down here as price drew down. So the same way they can grind price down like this is the same way they can kind of grind price to go up as well. So that's something to keep in mind as we approach these green EMAs. We haven't gotten quite there yet, but something that, a potential opportunity that I'm seeing is if we close today's daily candle below this daily candle's low, and we confirm a bear trend, and we turn this white candle into a resistance zone, what we could see is the next day we push into that white candle resistance zone, and then we reject right into these green EMAs. So that's something I'm going to be keeping an eye on as well. A lot of things I'm keeping an eye on, folks. A lot of things. So if we go down to the 12-hour time frame, let's just go to the 6-hour, because 12 hours is not really worth anything. So this yellow resistance level that I highlighted in yesterday's video, I believe, or the day before, I think both, has clearly shown to hold up very strong here. So this is from our bear trend right here. So we have a high, low, lower high, lower low. And remember, whenever we're looking for support resistance levels, we're just looking for that trend. We're looking for the four components. On the bull side, we're looking for a low, high, higher low, higher high. And then on the bear side, we're looking for the opposite. So we're looking for a high, low, lower high, weakening bull momentum, and then lower low to confirm it. And we come back into this level, the last up candle before that down move. And here's our entry for a potential short. Boom, we get a rejection off of that. So that's the main resistance zone that we have above us on these lower time frames. You can see right now that we're getting a pretty significant bounce, from that the dark blue 3-day support level, and you can see that based on the longer lower wicks here, as well as the increasing bull volume. So we could see a nice bounce up here, but something I want to point out is, I'm sorry, this is on the 4-hour time frame. I wanted to point this out. We closed below the investor EMAs on the 4-hour time frame, so these you can see that they're already starting to provide some resistance for price, and so if we do end up rejecting off of these could expand to turn into the bearish scenario. So if we look back, look something like this. So once they expand to the bearish scenario, then you have, entries for shorts here, here, and here. And then we get down. And then once they re-expand to be in the bull scenario, you can see here's an entry here, bounce. We close below it. So then, obviously you're out of the trade. Here's another opportunity here. We didn't quite get to it there. We got close. And then, out of the trade again. So the 4-hour, I don't really like to use the super guppy on these lower time frames, but it is something that I look at for short-term support or resistance, because it's just a collection of a bunch of EMAs all compact into one little area. And that's kind of what we're seeing right here in this gray area, is the combination of the faster EMAs rolling over as well as those longer-term EMAs as well. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Leutheria.com. If you're just getting started trading these crypto assets like Bitcoin, Ethereum, and other altcoins, this is a great way for you to learn the foundational elements such as candlestick analysis, volume analysis, trend analysis, and many other components as well. So check that out, and until tomorrow, onward and upward.